Here is the uncomfortable truth nobody on finance TikTok wants to admit. The next big Forex move is not going to come from a chart pattern. It is going to come from three central banks disagreeing in public. Welcome back to Hairy Trades. Today we are looking at policy divergence between the Fed, the ECB, and the Bank of Japan, and why that divergence could be the trigger that finally cracks the S&P 500 in 2026. If you trade Euro-US dollar, USDJPY, or gold, you need to hear this. Right now, the setup is simple to describe and brutal to trade. The Fed is sitting on sticky services inflation and a labor market that refuses to break cleanly. The ECB is already cutting because European growth is weaker than the headlines suggest. And the Bank of Japan is the wild card because every time the yen drifts back toward the weak side of 155, intervention risk and another small hike come back on the table. Three central banks, three different directions. That is what we call policy divergence, and historically that is exactly the environment where the dollar makes violent moves in both directions inside the same month. Now connected to equities. The S&P 500 has been leaning on the idea that the Fed cuts soon and saves the day. If inflation prints hot one more time and the Fed pushes cuts further out, the rate differential favors the dollar, risk assets get hit, and SPX has a real correction, not a dip. That is when Forex traders eat. The practical lesson is this: do not chase the dollar in a straight line. Watch the spread between 2-year US yields and 2-year German yields for Euro-US dollar. Watch the spread between US 10 years and Japanese 10 years for US dollar JPY. When those spreads widen in favor of the dollar while equities sell off, that is your high conviction window, not when CNBC is screaming. For defensive plays, gold is the obvious one, but the cleaner trade is often long gold against a weakening currency, not just against the dollar. XAUUR and XAUJPY can move when XAUUSD is stuck, because the metal is doing one job and the currency leg is doing another. So your homework tonight is simple. Pull up a daily chart of DXY, Euro-US dollar, USDJPY, and gold side by side. Mark the last three central bank meeting dates. Look at which pair actually moved and which one just made noise. That single exercise will teach you more about divergence trading than any indicator. If this lesson helped, drop a comment with the pair you are watching into the next Fed meeting, and I will break down the highest conviction setup in tomorrow's video.